The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 17th, Tom Terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that is something you and I, we must master each and every day. So let's begin with some empowering beliefs. Let's start off with understanding that you and I, we really don't have a giant capacity, or we don't really have the idea to understand the giant capacity that we can immediately command when we focus all of our resources on mastering a single area of our lives. And one of those areas of our life that I believe we should master is trading. Another area is time. You see, once we master time, then we understand that we typically can overestimate what we can accomplish in a year, but we underestimate what we can achieve in a decade. Just think about your life, folks. It's usually the way it works. Now, another reason that some of us don't achieve what we truly want in life is that we don't direct our focus. We never concentrate our power. Many dabble their way through life, never deciding to master anything in particular. That's not true of you, but you can pass this along to those that you know are like this, because success, as you know, comes from taking the initiative, of following up, of persisting, of expressing the depth of your conviction. And the question is, what simple action could each of us take right now to produce a new momentum towards some success that we want to achieve in our life? You know, this much I know to be true. The path to success is to take massive, determined action. There's no abiding success without commitment. If you want to be successful, find someone who's achieved the results you want and copy what they do, and you'll achieve the same results. The time is now to master anything it is that you want in your life, because mastery, well, as Tommy likes to say, it's a beautiful thing. You know, life is a mirror, and life will reflect back to us what we think. My favorite expression about mirrors is this: turn your mirrors into windows. It means look in the mirror, see the person you want to become. I say become because you are always improving. It's always about growth and contribution. And then take massive action and jump right through that mirror. Turn your mirrors into windows, folks. Let's go check out the windows and the mirrors of the market. Right now, we've got the Dow trading off 88 points, trading at 15,285. S&P off 3 at 1718. NASDAQ down 10 points at 3829. Russell 2000 off 1 point, trading out at 1091. NASDAQ 100 down 9. NASDAQ Composite, boy, that's the engine that just won't stop moving. That's up 10 points. How about the New York Stock Exchange? No, the New York Stock Exchange is up 10 points. How about that? That's the engine that won't move to the downside. That's telling you a big story. You've got net advancing issues at 290 out there. The market breadth here getting a bit stronger. Goldilocks up $37 right now, trading out at $13.19. Nice call there. Mr. Tom O'Brien. Silver's up 48 cents, trading out at $21.84. Light sweet crude back $1.56, trading out at 100.73. A lot of movement in the currency markets. We didn't get to that during the last show. We will try to get to everything, but there's a lot to go take a look at it. Of course, I'll be happy to take your call at 877-927-6648. Now we can take specifically a look at your stock chart. So let's start here. Let's kind of go A through Z. If we can, let's start off with A. What are we going to look at? Well, number one, we're looking at the VIX index. Right now, it's traveling at 1298. It is well below, with conviction, below the 50-day exponential moving average. So everything is set up for a nice bullish leg in the markets here. Not that we haven't had some nice action off of the lows from a few days ago, but everything is set for the bulls to just absolutely continue to maintain control of the marketplace. And the VIX now trading down with some additional conviction as we speak today. If we take a look at the New York Stock Exchange, it is the one green index out here. And that is important to be paying attention to because this is not stopping. The oscillators are above zero, so it has every reason to move higher. It moved through the 0.786 retracement level yesterday, sliced through with a nice bar. That is a very strong bar when you open at the bottom and close at the top. They don't get much stronger than that. The only way they get stronger is just simply to be wider out there. New York Stock Exchange now trading inside the swing point from September 19th, the high of which is 99.05. The New York Stock Exchange wants to make an A to B equals CD up, take you into the 10,101, 10,121 area. So oscillators all above zero, VIX below the 50-day exponential moving average. That is absolutely crucial for the market to continue with its energy that it needs in order to be able to move to the upside. If we go take a look at the S&P 500 here, a wide-ranging bar slicing through the 0.786 level yesterday, closing inside the swing point. And it's really the swing point out here is September 19th, the low of which is 1720. You've rejected that a little bit here this morning. The high is 1729. The S&P 500, it wants to move up into the do the 1 to 1 point, the 1 to 1 A to B equals CD at a minimum. That's at 1776.80. That's what it wants to do. Look, it could travel sideways, maybe back off a bit here, but all the momentum is to the upside. Everything is in place for the markets to continue to move higher. That is on the S&P 500. Okay, so the weak link, well, there's nothing really weak about that monthly chart, but we don't need to look at the monthly chart here right now. Let's take a look at the let's take a look here at the weekly chart. We've got one more day left in the week out here. It's always helpful to take a look at a weekly chart. This is of the Dow, and this is the supposed weak link out here. It's really not that weak. When you take a look at the weekly chart, it's actually extremely strong out here. So with the back off today, right now, just kind of a little spinning top-ish type of candle out here. Nothing bearish about the weekly chart of the Dow out here. And it's important to understand the trends that you're dealing with because you don't really want to fight the trend, so you need to understand the longer-term trend out here. If we take a look at the daily chart, yeah, it's backing off, but, take a look at that. Take a look at that bar yesterday. Just a thing of beauty when you're looking for bullish bars. If you're looking for bearish bars, you'd want to see that bar all colored in red out here, but that's not what we saw. Move through the 0.618 retracement level. It wants to go tackle the rising price channel that it broke out of. That means it wants to really go test the highs, get inside the September 19th area. That's going to be up at the 15,695-ish range. So that is on the Dow. Of course, tomorrow makes the week, and we'll come back and take a look at the chart on a weekly basis. Oh, monthly chart here for the Russell 2000. Are you kidding me? The monthly chart says 1127, more likely 1268 is really what its target is. But let's not take a look at the monthly chart. It's only the October the 17th, so we got a lot of time left in the month out here. If we take a look at the daily chart, this thing is up over its most recent highs. It's got a confirmed A to B equals CD on the daily chart that takes us to 1129. That probably matches right around the area on the weekly out there. So nothing bearish about this pattern inside the Russell 2000. And we'll take a look at the ETF structure. Nice volume inside the ETFs yesterday. The NASDAQ composite here, continues to just simply motor along. Today, just an inside day, so nothing really bearish about the pattern out here. The NDX 100, this has a 1-to-1, but it wants to do more than 1-to-1 in my opinion. But 1-to-1, that's still a nice move. 33.78. You are at 32.73. So you're talking about just the 1-to-1 is another 110 points out here. Certainly nothing bearish about this stock chart. That's on the NDX. We take a look here at the ETF structures. Let's go look at start off with the diamonds. Let's start off with weak hands out here. The diamonds here, what do they do this morning? So far they have broken through the channel line again. They're just tackling, it looks like, the trend line, just pulling back a bit. But yesterday they made that 0.618 retracement. It's off of its session lows here, so it's trying to get some energy. It's trying to bring IBM, trying to pull IBM up. Of course, IBM is the leader right now in the clubhouse. To the downside, it's trading off $11 with some volume. It's down about 6% out here. Imagine what the market would be looking like if IBM had some energy in it right now. Still nothing really that negative when we take a look at the Dow chart. Where could it pull back to, with the weak link out here? So where should the weak hands in the markets pull back to? Well, at a minimum, right, if this market's really weak, if it's going to show a first sign of weakness, where would it pull back to? At least the 0.382 retracement from the low to the high. And that would be 150 Well, let me get rid of some of the numbers out here because it's confusing the heck out of me. That would be 151.04. Right now, the low here has been 152.05. So that's just a dead cat bounce. If it moves back to 151.04, would you start getting all bearish? No. Where it would easily pull back to would be the 149.48. That would actually be a beautiful buying opportunity if, in fact, it would do that. It looked like maybe that was the opportunity with IBM leading the charge to the downside here this morning, but the New York Stock Exchange is just too much buying going on in the market breadth of the stock, and people are just saying, the heck with IBM. Go have your fun inside the Dow Diamonds out here. But a pull back to 149.48, coming in that wide-ranging bar from October the 10th out here. And today's candle, as we speak here today, that's not a bearish candle out here. So that's inside the weak hands. Let's go take a look at the other ETF structures. Let's take a look at the Qs. What do the Qs do? Now, again, remember, the Qs confirmed an A to B equals CD up. They did that on September 9th as they had 25 million shares, taking out 23 million shares. Yesterday, you were up with 46 million shares. The most recent swing point high only had 25 million shares. Is that strength or what? I mean, you can take a look at multiple A to B equals CDs out here. You could come take a look at the A to B equals CD pattern here. So you got A to B equals CDs within A to B equals CDs. The shorter one would be August 27th, the low 74.96. The B point out here, September 19th, 26 million shares. The C point, retracement down to October 9th, that had 64 million shares. Took out the B point yesterday with 46 million shares. That 1-to-1 alone takes you to 81.05, 1-to-1.27 to 82.37. So 82.30-ish to 82.80. That's at the minimum of where the NDX want, or the Qs want to travel to. But a nice move here off of that C point. If price stays along the left-hand side of that chart, that's actually screaming that it wants higher price, more likely the $85 type range. That is on the Qs out here. That's as we speak right now. You know, you have to always be willing to come back and take a look at what the message of the markets are as information is relayed to you. Never worry about having to change your mind because the market changed its mind out there. But so far right now, the mind of the market is to march and move higher. We take a look at the SPYs out here. The SPYs yesterday making the retracement. Let's take a look at swing point high to low. The retracement here above the 0.786 with a nice wide-ranging bar. That's like a 1.4, 1.5 on the Richter scale, with 1 being the strongest out there. So nice bar out there. Volume-wise, yesterday, 161 million. Moving in towards a swing point that only has 146 million shares out there. So the SPYs, they've got a confirmed A to B equals CD up. Looks like they're going to try to make another A to B equals CD up. We'll take a look at that as it gets to the September 19th swing point. But the one that is placed right here, right now, gets you to 178.28 or so. That'll take price up into the rising price channel. That is inside the SPY out here. Let's finish this off by taking a look at the IWM before we go to break. The IWM here wants to travel up to 111.90, but Steve-O's call says, nah, why stop there? 115 looks a whole lot nicer, and that is where the IWM will head to. Right now, Dow's off 81 points, S&P down about 2. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 83. S&P is off 2. And congratulations to one of our listeners out there, Carl. He sent me an email just a short time ago. He wanted me to take a look at one of his stock holdings, Siemens. SI is the ticker symbol. So the information contained in the email said that he was in at 99. Congratulations to Carl for getting in at 99, folks. That is the bottom of the consolidation zone that you're taking a look at here on my screen. So what a nice entry point. He's suggesting that there's support at $120. He's thinking is that there's some momentum to the downside. Now, what Carl did not tell me is what is his time frame on this trade out here. So I'm going to go ahead and pick apart the about the stock chart and give him give you a feel as well as to what it's doing. But congratulations to Carl. Folks, this is what you like to be able to do, is to be able to buy a stock at the bottom of its consolidation zone. Now, the consolidation zone on this ran from $99. The low out here that I'm looking at, the swing point, June 24th, $99.07. And Carl's in just a tad below that, or maybe it's a $99 level. Either way, it doesn't really matter. That's at the bottom of the consolidation zone. Now, the top of the consolidation zone is 113. So we're looking at, a 14-point consolidation. So 127 is really what the target is. Now all I did was just took this yellow box here, just made a small version of it, and you can see at 127 is really what it is projecting. Now 127, that happens to be the 1 to 1.618, A to B equals CD as well. But you see, even if you didn't understand A to B equals CD patterns and you understood consolidation out here, you can see that both of them are giving you a price projection in that area. Now I'm just going to move the little yellow box over here. Now, as we take a look at this equity, the A point on this is coming off of June 24th low. The B point here is August the 6th. Volume there was 569,000 shares. As the B point was passed, it was passed with 679,000 shares. Ordinarily, I would say, hey, look, because it gapped up through that area. But I think Siemens is doing a lot of its stock here. You can see a lot of different gaps. I believe that's all just simply because of currency conversions in the marketplace. So we won't really pay attention to the gaps. What we do know is that it passed the B point with volume. And if we take a look at that C to D leg, substantially stronger than the A to B leg. That tells you that it wants to do more than a 1-to-1 A to B equals CD. That says right now that it wants to move up to 127.54. The A to B equals CD patterns are confirming with the consolidation break. As far as when I take a look at the daily chart here, this to me looks like this is in a super strong bullish move out here. Not just because of the C to D, but that certainly gives you one element there that's in a strong move. But when I take a look at what it's doing with the relative strength indicator out here, a very, very strong move inside of Siemens. So if you're in at 99 and it's at 121.85 right now, I don't know the length or the term that you're looking for, but this wants to get up to 127.54. There's no reason that I can see here whatsoever to not continue to hold on to this trade, at least to the 127-ish range out there, and that is on the daily chart. If we turn this over into a weekly chart as well, on the weekly chart, let's see if there's anything that we can see out here that would be any type of cautionary sign. As we take a look at candlesticks, no, what the candlesticks tell us is that not only is it up and over the consolidation zone, but it took over oops, I didn't mean to do that. There we go. It took over a resistance area, and it did that resistance area, which is going to be this bearish engulfing candle from March 29, 2013, out at 113.16. So old resistance becomes new support out here. We take a look at retracements from high to low. The retracement here, I'm going back to May of 2011. Down to a low that was put in June of 2013 June 2012. Your your 0.786 retracement says 132. So 132 is absolutely in the cards here. No bearish candles on the weekly chart. And when I take a look at the weekly chart, the daily chart actually looks like a stronger bullish run than this one does than the weekly, but still this is a nice strong move out here in the marketplace. A to B equals CD patterns on this. They're going to give us really the same take, but we can see what's that low there is 98.69, and we got 99.07. So you can see a little bit weaker on the run of the A to B equals CD. The 1-to-1 takes you to 133 though, and that's really what it wants to do. Let's see if it took out the B point with volume. 1.5 million shares or so on January 25th. Got through that area with 1.9. So the weekly has it confirmed A to B equals CD up. So that is for our man Carl. Nice entry there and a nice looking stock chart. Right now, the Dow is off 74. S&P is only down 71 cents. The bulls, they got their horns out, folks. And their horns, they're certainly out, not just in the market. They're in horns are out in gold and silver and the euro. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now, sorry, I was on a different screen, paying attention to something else, truly multitasking. Dow's off 74, S&P is down about 50 cents. So let's go check out the currency market. Now, we'll start by taking a look at the U.S. dollar index. Number one, this is a weekly chart that we're looking at, by the way. And we'll go take a look at the daily as well. So on the weekly chart, we're looking at the rising price channel as the U.S. dollar index came off of its lows. Its lows, by the way, back here in May of 2011, a U.S. dollar index got down to a low of 72.86. So far, on the run to the upside, it made a high the trading session the week of July 12th, 2013. That high came in at 84.96. Nice rising price channel. It broke through it, and it broke through it with conviction. It tested the bottom of that channel back the week of August 9th, the following 4 or 5 weeks out there, and then broke through it on September the 20th. Now, we haven't seen a test of the top of that area. But what we must be paying attention to here right now is the following. This is a weekly chart, so it doesn't, this chart has more, will have meaning tomorrow. But in case I don't remember to pull it up tomorrow, you'll know the number to be looking for. And that's this camera candle here. Now, broke through the rising price channel to the downside. So far, this looks to be a real break to the downside. The hammer candle low This is the week of October 4th, is 79.72. Right now you're trading at 79.76. The low that has been tested has been 79.70. If it closes below that, number one, it sets up a move down to its most recent area where we saw some bulls rush in. That was during the trading week of February 8th, 2013. That says that support would be the low of the bearish engulfing candle that it engulfed, which was the bullish engulfing candle it engulfed. That was February 1st low. That's 78.92. So that would be your minimum objective. 78.57 would be your 1-to-1 A to B equals CD down. But if the hammer breaks, what it looks like more likely to me is the outcome is a move to 77.42. At 77.42, it'll set up a nice Gartley buy pattern on a weekly chart. If we take a look at what that actually looks like here, we can go ahead and color that in on the chart. And that looks more likely to me what the U.S. dollar index is trying to do. Number one, we can see that the retracement up from the highs, as it made the highs in July 12, 2013, made that's the A point, the B point down here on August 23rd. The retracement, only about a 50% retracement. Now, what you'll see at that 77.43 number here, you'll see a nice Fibonacci expansion number there, 2.618. That would really stretch out the U.S. dollar index to the downside. If, in fact, that happens here, that will put some energy in, should put some energy into all of the commodity sector out there, not just gold, silver, I suspect light sweet crude as well. But you know what? Just trade each chart pattern, the pattern on the actual chart. Too many correlations can get you a little bit whacked out here. So that's the U.S. dollar index. We'll go ahead and take that off of the screen. Again, the key to be paying attention to for the week here is a close below 79.72. You break that hammer if you're long. It says that you're wrong out here on the trade. So that's in the U.S. dollar index. That was the weekly. If we take a look at different time frames on the daily chart out here, the daily chart shows an A to B equals CD down to 78.64. That would be your 1-to-1. What was the number here on the weekly? Let me go back here, 78.74. And at 78.58 as the first target. So that would seem to be the first target area here. Oops, window, vertical. Where's the daily? Do I have the daily out? Yeah. So that would seem to, now if you take a look at the bar here on the way down, wide-ranging bar here this morning. Again, this is a bullish engulfing candle right here, the trading session of October 4th on the daily chart. So that says 79.72. Also, on the daily chart, a bit of support out here. So close below that on the daily today would tell you, okay, probably the weekly is going to go ahead and break that hammer candle low and then move lower with the A to B equals CD down. So what's all that about? Well, it's really all about the pound, it's about the yen, and it is about the euro out here. So if we take a look at those charts, let's go through those one by one. Let's start off here by taking a look at the U.S. dollar, Japanese yen, making a beautiful Gartley buy pattern. It confirmed that buy pattern on October the 9th out there. And what it did, when you're trading Gartley patterns, what you need to do is you need to make sure that you've set up your exit strategy, because you always should have your exit strategy on every single trade that you enter. Both sides should be bracketed, your stop as well as your exits. How about that? As well as your exits out there. A normal Gartley pattern is going to go ahead and make a 0.618 retracement. In this case here, the number from high to low, that would be from the September 11th high down to the low that was put in on October the 8th, would take you up to about 99.05. Folks, what it actually hit yesterday, and when it hit intraday here, 98.96. 98.96 got up to 98.99 versus 99.05. And remember, folks, what you want to do is you want to make sure that your exits are not at that exact number. You want to give them some room, in this case here, to the downside. And you want to be paying attention. You also look at some other shorter-term charts. So this hit its target. Right now today. You got a little bearish engulfing candle. That is more bearish than you'd like to see on just a normal pullback now. Could this be setting up an A to B equals CD? It most certainly could. But if we take a look at, let me do this here. Let's get rid of those retracement lines. Let's take a look at the new retracement lines now and see what this could be doing. And what we can see is that it has sliced through the 0.382 retracement here on the pullback, wide-ranging bar. It says that what the U.S. dollar Japanese yen is likely to, the first target's going to be 97.48. There's your sweet 618 spot. But with that wide-ranging bar, it would have to hit that 97.48 level on some real small-bodied candles. If it does that, then that says, okay, that's enough of the move, and that could set up your A to B equals CD up. If it's coming in with any wider-ranging bar, then the 0.786 level is where it would head to, and that's right around the 97.87-ish range. So what we've got here, that's the U.S. dollar Japanese yen. That's what's going on inside this currency pair. Let's go take a look at the euro U.S. dollar. I'm going to switch over to a different set of charts out here where we've got the daily, the weekly. This is very strong move. We've got a bust out of a consolidation zone. That's that yellow box that we're seeing on the upper right-hand corner of my screen out here. When a consolidation busts out of a zone, either direction is going to make a move equal to or greater. Let's go measure what that is here. We'll just make a little box. Let's go ahead and move it up to the upside just to give you a feel. Now, in this case here, you can see that the breakout of that box would actually take the euro over its B point of an A to B equals CD up. This is the daily chart that we're looking at. So the breakout of the consolidation suggests to us that the euro is going to break out above a swing point. That's a swing point. It's a significant swing point for us to be monitoring. That's February the 1st. That's the high of 1.37098. That then sets up the A to B equals CD. And if we take a look at the C to D leg, just as strong, maybe a tad stronger than the A to B leg. Well, the 1-to-1 of that larger pattern says the euro would want to travel up to 1.4421. Now, it's not going to do it overnight, but that's really the pattern that is set up here. Well, if the euro is going to do that, with it being 53% of the weighting of the U.S. dollar index, that's why we're seeing what it is that we're seeing inside the U.S. dollar index. Says it's going to go ahead and take out that hammer candle. Very strong move out here inside of the queen, inside of the euro. Now, there's a smaller A to B equals CD. That's the one that it should complete first, right out at the 1.3802. Back off a little bit, travel sideways or so, or maybe just go right up to 1.399. These moves are not going to happen overnight. You can argue whether or not the euro should be getting stronger versus the U.S. dollar. Look, it's just about the patterns. Take a look at what the technical signals are communicating to us and the patterns, and I'm willing to change as soon as new information is presented to me, and you should as well. And until that information is presented to us, what this move is saying is that it's got some legs. It's got the dollar weakening out here. That is inside the euro U.S. dollar. That's on just the daily chart. If we take a look at the weekly chart out here, the weekly chart, this thing is nothing but strength out here. Take a look at those candles. What this did, wide-ranging bar the week of September 20th. Then it had this little confusion bar here, a little high wave candle, and that was on September 27th. I would say if we could give any of these candles here, any of these three candles a doji, you'd have to give it as that one, September 27th. So if we do that, and doji candles coming into resistance mean a whole lot more. They mean a whole lot more to Stevie-san, I should say. And so that becomes resistance. Resistance either the high of the doji candle or the session before. Well, it would be the session before, 1.3567. When you get a close above that, it tells you it tells you which direction the trade is going to move in. It also tells you you've broken over resistance. That's important to say. That's important for us to understand. So the weekly chart for the euro U.S. dollar says it wants to go up to the top of the rising price channel out here. Now, these lines coming down here, as I pull this back, the blue and the red line out here, that's where it's going to run into some significant resistance. That's where you're going to have to get those fasten seatbelt signs on, because that is a long-term descending price channel inside. This is the weekly chart. This takes us back into 2008 out here, so it's a long-term descending price channel. So as price gets up into this area, let's see if we can try to let's try to take a look at the A to B equals CD up, see if that's where it runs into it. Yeah, so right there at about 138, even Steven, is where this should start running into some significant resistance. Now, what's going to be key as the euro is moving up into that area is watching the size of the bars out there and watching for any kind of reversal signals. But the weekly chart, nothing but strength here. So that says that the euro's got higher to run. That should put some fuel or weakness inside of the U.S. dollar index. So that and in essence here, by pulling it back, you can see the monthly chart unfold here. That's really what the monthly chart for the euro looks like. And so this is a super strong bullish move that we are in right now, the leg that we are in right now as we take a look at the weekly chart for the euro. Let's go back and take a look at the Great British Pound. Let's go see what it is doing here this morning. Nice bar. Nice wide-ranging bar. What this did here, this has got a super strong A to B equals CD structure as well. Remember, it took out the 0.786 Gartley sell, a 1.272 butterfly with a wide-ranging bar. That says that it's not only going to do a move, but maybe and more likely a butterfly pattern. But the move of a move, 100% move of a move inside of the Great British Pound takes you all the way back up to its highs, which is the swing point from January 2nd, 2013 out there. Nice big wide-ranging bar today. That's telling you some conviction behind this move. So the Great British Pound, it wants to get stronger. The U.S. dollar index get weaker out there, and that's what the stock charts inside the primary currency pairs, well, I say primary, the one that we really want to also be paying attention to is the euro Japanese yen. Why? Because this is the one that correlates to the U.S. market. And this one here, this has got a 1.618 butterfly, and this one completes patterns like there is no other out here. This has a completed butterfly pattern up at about 135.65, and that's where it wants to move to, and therefore that's what will also go ahead and fuel the U.S. markets. The S&P's moving to 1776 and or beyond out there. So that's the lineup of the currency pairs, how they correlate to either the commodity sector and or the stock market. Let's go out to Denver, Colorado, to Patty. Patty, thanks for calling. Thanks for holding. How are you this morning?
Are you there?
I sure am. Hey, thanks for calling, Patty. How are you?
Okay, how are you?
Excellent. Thanks so much for asking. You wanted to take a look at now I'm not familiar with this symbol here. Is it BBVA?
Right, Banco Bilbao Vizcaya Argentaria.
Wow. Wow! Thank you for pronouncing that for me. Would you do that for our listeners once again? Because that sounded beautiful. What's the name of the company?
Banco Bilbao Vizcaya Argentaria.
Wow! Perfect. Okay. So now, what kind of is this? This is a bank, I'm assuming.
Right. And
Perfect.
It actually got a presence in the U.S. and big time in Texas.
Ah, okay.
Which surprised me, but it has gone up remarkably. While I've been sleeping, been up, I think, 35% year to date.
Okay.
And I've been watching that along with Santander, which is SAN, and they both have gotten away from me. Santander I've been watching a long time and just was afraid to get into it. And I'm comparing the two, their performance and all that stuff. I can't do all the high-tech stuff, but just wanted your opinion for a long-term.
Long-term. So long-term, would you take a look at a weekly chart? What would you I mean, weekly charts are really good to take a look at, in my opinion, for a longer-term trade, right, because they help you understand the trend, that is out here. And if we take a look at this equity on the longer-term chart, let's just come off of the bottoms here and see what it's doing. Made a low on July 27th out at $5.30. That I'll use as my A point. The B point that we would use is the January 25th high, $10.57. Now, makes a retracement down into a low of June 28th. Now, if we take a look at that retracement here, if I go from A to B, that retracement is just slightly under 0.382, not even a 50% retracement. And only making that kind of retracement tells you it's going to be a strong move coming off of that C to D leg. Now, volume-wise here, we'll take a look at it. On January 25th, when it made the swing point, that B point had 2.8 million shares for the week, and it got up over it with 8.2 million shares. That was a really nice signal there. So this has on the longer-term chart. Oh, we're running out of. Well, we're going to be back for another segment. Patty, would you be kind enough to hold?
You bet.
Okay, we're going to come back to Patty. We're going to take a look at Banco. Well, I would just call it Bilboa Vizcaya. I don't know how that worked out, but we'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 88 points. S&P pretty much flat out here. Russell 2000 flat as well. Leading the charge, the upside, Core Laboratories. They're up $11.50. That's up about 6.5%. And to the downside is IBM off about $11 and change, down about 6%. We're going back out to Denver, Colorado. We're taking a look at a couple of banks with Patty. The first ticker symbol that we're looking at, folks, is BBVA. So, Patty, and coming back and taking a look, because you're looking at more of a longer-term trade on this, it does have a confirmed A to B equals CD up, because the B point of an A to B equals CD was passed with volume, and passed with good volume. So that's a positive. Now, because it only did a 0.382 retracement, and as we take a look at the strength along this C to D leg, it tells me that 1339, which is the first target, that's your 1-to-1, it tells me that what we're looking at is more likely a price move to about 1481. So that's what I would use as my, to determine whether or not this would be a trade to get in. Now, let's assume that you were going to go ahead and get into this trade. Let's assume that you were going to do it here today. How would I go about taking the trade? Well, the very first thing, the most important thing, once you want to enter a trade, it's your position size. And position size is everything about being able to stay in this game forever, the money game. Because the only thing that we can control here is risk. Even though we've got a great-looking pattern out here, it's really what are the shareholders going to do. And so if we take a look at the first equity you mentioned, because you mentioned two, and we'll take a look at both of them for you. BBVA is the ticker symbol. I have what I call a position size calculator. And I'm going to show you how it works. You can do this stuff manually. But the key here is to first only risk 1% of your working capital, whatever that is. And I'm going to just use a number of $10,000 because if you have $100,000, you can just multiply times 10. Or if you have $50,000, multiply times 5. It just makes it relatively easy out here. And what you want to know is what the average daily range is, what the average daily breathing pattern of any stock is. Because if you put a stop in and it's within the average breathing pattern, you can be right on the trade and wrong on the stop and get knocked out. And you don't want to do that here. So the average true range inside this equity here is 17 cents. So it's trading at about $12.56 out here. So I'm going to go ahead and use $12.56 as our entry point. And we're going to use, instead of the 1-to-1, we're going to use, as far as a target, we're going to use 14.83. Now, the importance of understanding what the average true range and your stop is that when you risk $10,000, we're really only risking, or when you have $10,000 in capital, we're really only risking $100 on the trade. And the way you then figure your position size is what is the stop that you're going to use. Well, I don't like to do anything average. If you do something average in life, what kind of results are you going to get? Poor. And I don't like poor results. So what I like to do is take a Fibonacci expansion number of the average true range. In this case here, I like to use 1.618, especially if you're looking at a longer term range. So we're going to take 17 cents times 1.618. We're going to make our stop 28 cents below the our entry point here. Now, if we did all of that, this tells us, if this trade were to work out, this would give us an 8-to-1 reward to risk ratio if we came into it right now. Now, the problem is, if we use 1% risk here, it would require 46% of our working capital because it says you should buy 364 shares. Well, in one equity, you really shouldn't put more than 10% of your working capital. So all that you, and the two changes that you would make to this entire trade are either increase your risk, so that would be one way to do it on the $100. So instead of it making a 28-cent stop, you can make it a 50-cent stop out there and have fewer shares. Fewer shares times the purchase price would start to get you down, below or towards the 10% range. I think what you ought to do is just decrease your risk, maybe to just simply 0.25%. You only have to risk $25. Only have to risk $25 on every 10,000. And now you're just about 11%. This says that you would buy about 91 shares. I'd round it up to 100 or so. How's that work?
That's fine.
All righty. Hey, we're out of time, Patty. Sorry about that. I would love to do... you can send me an email, steve@tfnn.com. I'll send you the trade information on Sam as well. Have a great day.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial, do The Opening Call. Just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.